Hello students, you are the future chartered accountants of India. We have completed chapter 1, that is basics chapter. Today we are starting the new chapter, that is chapter number 2, residential status and scope of income. Welcome to my YouTube channel Abhi CA Classes. This is CA Abhijith Acharya welcoming all for today's classes. If you are not subscribed yet, please subscribe to my YouTube channel and please share this to the n number of students. Without wasting further time, we'll start today's chapter. What do you mean by residential status? We'll first take the introduction part so that you will be in a better position to grasp in brief about the residential status. The incident of tax on any SSE depends on his residential status. The income tax is applicable based on his residential status. Okay, if any person becomes a resident on satisfying any of the conditions that specified hereunder, thereunder, thereafter, his entire income all around the world is taxable in India. If he is a resident, if he is a non-resident, then only Indian income is taxed in the India. Only if he is a non-resident, only Indian income is taxed in India. Understanding, right? So this is a basic concept. Next, first we will see the residential status of individual. How to compute the residential status of an individual. Okay. First, the basic condition. There are two conditions. First one, basic condition. Second one is additional conditions. First, we will see the basic conditions. It has been specified under section 6, subsection 1 of Income Tax Act 1961. It says that any of the two conditions he is satisfied, then he is treated as resident. What are those conditions? Number one, he should stay in India for 182 days or more in the previous year. That is in this previous year, that is 23-24. If any person is staying honor of 182 days or more, then he will be treated as resident in India. Or if he is not satisfying that condition, then we have to check another condition, that he should stay in India for 60 days or more in the previous year. 60 days or more in the previous year, and that word is very important, and it is only applicable for second condition, that is 60 days or more in the previous year and 365 days or more in last 4 preceding previous year. Last 4 preceding previous year means excluding this previous year. Excluding 23-24, you have to see the last 4 preceding year. This information will be given in your question. That is 22-23, 21-22, 20-21, 19-20. Okay, these 4 years, if he has stayed for more than 365 days, actually in total, then he will be treated as resident in India. 60 days or more in this previous year, 365 days in or more in last 4 preceding year. If this condition is also satisfied, then he will be treated as resident in India. Any one of these conditions is satisfied by him, then he will be treated as resident in India. If he is a resident in India, then we should see the additional condition. If he is not satisfying any of the conditions specified there on basic condition, then he should be treated as non-resident. We need not to see further with regard to the additional conditions to be satisfied or not. In that case, if he is treated as resident, then we should see further whether he is satisfying additional condition thereunder specified under section 6 subsection 4 6 subsection 6. Okay, in this both the additional conditions should be satisfied. A resident for 2 previous year or more in the last 10 previous year. Out of 10 last preceding, that is 20-23 backwards, as we count for 10 previous year. Out of that 2 previous year, he is a resident, then he will be treated, he is satisfying the additional condition number 1, and is mentioned, and stay in India for 730 days or more out of last 7 previous year, excluding this previous year. Wherever last 7 previous year is mentioned, you should think that is excluding this previous year. That's it. Additional condition. First, I will say once again, resident for 2 previous year in out of a 10 last previous year. Okay, and you should stay for 730 days or more in last 7 previous year. Okay, if he satisfy both of these conditions, they will be treated as I will say. If any individual satisfy any of the basic conditions, their first 182 or 60, any one of the conditions, then he will be treated as resident in India. Otherwise, he will be treated as non-resident. If a resident satisfies both the additional condition, then he is treated as a resident and ordinarily resident. Otherwise, he will be treated as resident but not ordinarily resident. He is not actually ordinarily resident. That's it. If he satisfied both the additional condition, what is additional condition? 2 out of 10, 730 out of 7 years. Then he will be treated as R and OR in short. Otherwise, he will be treated as R and NOR. What is the difference? We will see in scope of income section. Okay. Till now, I hope you have understood. Next, there is some notes. This is very important. Might be before that, this will be treated as category B chapters. Okay, this also forms a very important chapter from your exam point of view. First chapter is basic, that is C, but it is very important for your understanding purpose. But this is to be categorized under B portion, B category. Okay. Day in which he enters India, a day in which he leaves India, shall also be taken into consider for computing the number of days. For example, I came to India today. I leave India tomorrow. Then the number of days stayed in India will be taken as 2. A date of entry, date of departure should also be considered while computing the number of days stayed in India. Okay. Next, very important. In the following cases, only first basic condition would be applicable for the determination of certain residential status. What is first basic condition? 182 days or more in the previous year 23-24. Second basic condition will not be seen, should not be seen. What are those? Which are those 3 circumstances? Indian citizen, it should be an Indian citizen, leaving India during the previous year, 23-24, for an employment outside India. For example, if me having an employment outside India, if I have to go out of India during this previous year only for employment basis, not for any other business purpose, okay, only for employment basis, then the first condition should be taken. Second basic condition should not be considered. Then further it is same. If he satisfied first basic condition, okay, resident. If he is not satisfying first basic condition, then he will be flatly considered as non-resident. We should not see his conditions. We should not see the satisfaction of second basic condition. It should be ignored. Okay. Next condition. Next circumstances. Indian citizen leaving, actually being a crew member. Crew member is actually boat rider. That's the captain of boat, I think. Crew member of Indian ship. That is word is very important. Indian ship. If it is a foreign ship, it should be that this first basic basic condition we should see. But if is a crew member of an Indian ship leaving India during the previous year, then we should see only the first basic condition. We should ignore the second basic condition. Okay. How to compute the number of days? We'll see in next level. Okay. The third circumstances, Indian citizen. This might be a very confusing one, but I will try to resolve your confusion as much as I can. An Indian citizen or person of Indian origin, POIO in short, person of Indian origin, engaged outside India in any employment or business or profession in India, visiting in India. He visits only for India, not for any other purpose, not for employment, not for any other business related works. He visiting India during the previous year, then and that's what is very important. And his total income, excluding foreign income, we should not see his foreign source of income. We should see his only Indian income. Might be Indian interest, some other. Indian income is up to 15 lakh in the previous year. I will say once again. I will revise once again. Indian citizen. First two circumstances. I hope this is very simple. Second circumstances might be little confusing. Indian citizen or person of Indian origin should be an Indian citizen, person of Indian origin, engaged outside India. He was there he is employed outside India, or he is having some business or profession outside India. But he visits India during the previous year, and during his stay in India, his total income, excluding that foreign income, in India should be up to 15 lakh. Then also the first condition only be to be taken. The second basic condition should be ignored. What is second basic condition? 60 and 365. we should take only 182 days or more. We should see, and if it is not satisfying that basic condition, then we should treat it as non-resident. Only Indian income is taxable. Note, what is mean? What do you mean by person of Indian origin? That is mean by he or either of his parents or grandparents were born in undivided India. For example, Pakistan or actually any other Bangladesh, they were unborn India before the independence, right? If they were born, their parents, their grandparents were born in undivided India, then they are also treated as person of Indian origin. If I am visiting in India, having a business or employment outside India, and if during my stays in India, my Indian income is up to 15 lakh, then the first basic condition also to be taken should be seen. The second basic condition should be ignored, right? Very important. Next, very important points. In case of Indian citizen or person of Indian origin, POIO means person of Indian origin, POIO, having total income that we have discussed rather than foreign source is more than 15 lakh. Suppose there might be a case, right? If I am Indian origin or Indian citizen having a business or outside India or employment outside India, visiting in India, but Indian income is more than 15 lakh. Up to 15 lakh, second basic condition should be ignored. If more than income 15 lakh, then the second basic condition would also be applicable. But instead of 60 days, we should see whether he is satisfying, whether he is staying in India 180 to 120 days or more to be considered. If you can see here, the second basic condition is telling is 60 days or more. But if he is having Indian citizen or Indian person of Indian origin is having Indian income more than 15 lakh, then instead of 60 days, we should see whether he is satisfied 120 days or more, or 365 days during last 4 previous year. In addition to the first basic condition, if first basic condition is not satisfying, we should see the second basic condition also in this case, because his income is more than 15 lakh, right? We should see whether he is satisfying or not, and in that particular case only. Second, I hope you have understood. Second, in case of Indian citizen, person of Indian origin having total income other than foreign income exceeding 15 lakh during the previous year, who has been in India for 120 days or more. Just we have discussed 120 days or more, but less than 182. That means he is not satisfying basic condition number 1. He is satisfying only second basic condition. 120 days or more, then he will be treated as resident and not ordinarily resident. We should not see. There is no need to see. There is no need to satisfy of. There is no need to satisfaction of any of the additional condition. If he is staying more than 120 days, and we should be treated at R and N more. That is resident and not ordinarily resident. Okay. Simple. Next to section 6, subsection 1A, deemed resident. What do you mean by the concept of deemed resident? You should be a Indian resident, okay, not a person of Indian origin. There is no mention of person of Indian origin. You should be an Indian citizen having total income more than 15 lakh other than foreign income. Only Indian source of income is more than 15 lakh, and he is not liable to tax in any other country. For example, tax haven countries. There in those he is residing in those countries where tax is not applicable, and by reason of his domicile or residence. For example, as I have already told, tax haven countries. It is called tax haven country. There is no tax applicability. Then he is always treated as resident and not ordinary resident in India. I'll again count. What is the difference between above and this condition? Above condition is applicable Indian citizen and also as the person of Indian origin. But this deemed resident concept will be applicable only in case of Indian citizen having total income of 15 lakh or more and not liable to tax in any other country, and then he is treated as R and NOR. This might be a question for your MCQ purpose also. This provision will not be applicable if that individual is resident in India in previous year as per section 6 subsection 1. If he is satisfying any of the basic condition, then he will be treated as what do you call, they're already actually resident, right? In that case, this section we should not see. If he is not satisfying any of the basic condition, then we should assume that he should be deemed as resident and not ordinary resident. Only second note, only Indian citizen can become deemed resident. Only Indian citizen. If an individual who is not an Indian citizen but a person of Indian origin cannot be deemed as a resident, deemed concept. Stay in India is not necessary to qualify for deemed resident. Whether he is satisfied, whether he is staying in India or not, we should not see that, because if his income is more than 15 lakh, not having any tax purpose in any other country, it should be flatted it as R and NOR. There is no need to calculate further. Simple. Next, I have already discussed that person of Indian citizen being a crew member who of Indian ship living in India during the previous year for his business. Then how to compute the number of days of staying in India? Very actually very interesting concept. There is one formula. Period of stay in India for Indian ship Indian citizen being a member of crew member of a foreign bound ship leaving India. This is CBT circular. Okay, for computation of number of days following time limit should be excluded. We should not see the following number of periods. What is the meaning of formula? From the date entered into the continuous discharge certificate in respect of joining ship, when he is signing that authority of a foreign ship, whether I will be leaving India during from this day till to the date entered into continuous discharge certificate, that is on discharge certificate will be there. On that he is when he is going to sign that, to when he is signing off that ship, in respect of signing off the ship, from here to here I will not be there in India, and hence it will be excluded from the number of days computation of India, the residential status of those persons. From here to here, I will not be there, and hence that residential status should be excluded. The number of days should be excluded out of the total number of days prevailing in India from this period to compute whether he is a resident or not a resident. I think it might be a very understandable if you see an example. Mr. Anand, an Indian citizen, being crew of a Singapore-bound Indian ship engaged in carriage of passengers in the International Traffic Department of Chennai port. He is signing 6th June 2023. From the following details, previous 23-24, determine the residential status of a Mr. Anand for 24-25, assuming that his total stay in India in the last 4 previous year is 400 days. It is irrelevant because it is a Indian person, Indian citizen living in India for as a crew member of a foreign ship or Indian ship, right? Indian ship. This is irrelevant, that second base, because we should see only the first condition. If he is satisfying the basic condition number 1, then he will be treated as the resident and actual resident. That's it. Date entered into the continuous discharge of certificate in respect of joining the ship by the 6th June 2023. Date entered into continuous discharge certificate on respect of signing off that is still that date. I will not be there. 9th December 2023. From 6th June to 9th December, he will not be there in India. So how many days in between there? We should we should say the 6th June also, right? June, how many days? 30 minus 6. But we should add that 6th also. Plus 1. 25 days in June. 31 July. 31 August. September 30. October 31. November 30. Plus 9. 9 in December, okay, 187 days, but we should exclude that from 366 days. Why 366 days came? Because this is actually what we call leap year, right? Because 23-24 is a leap year. Minus 366 days, 179 days he has stayed in India. Why we should exclude that 187? Because for this period he is not there in India, right? We should exclude that from 366 days. So number of days he is started in India is 179 days, which is below 182 days, because for Indian crew member only first basic condition should be seen. It is less than 182 days, 179 days in this case, and he is treated as non-resident. Simple, very understandable. Next, till now we have discussed the resident status of the individual. We will see the resident status of HUF. Section 6, subsection 2. If control and management of its affair is wholly or partly in India, control and management means his key decisions is taken. His key decisions: when to sell, when to buy, when to. That's what are called the control and management of its affairs. If it is controlled wholly or partly in India, then it's called HUF is called resident. If it is wholly outside India, then it's called non-resident. Simple. But how to compute whether it is a non-ordinary resident or not ordinary resident? It is depending on the residential status of Karta, that is head of HUF. We have discussed it in the basic chapter. If the Karta of HUF is satisfying both of the additional condition, then HUF is also considered as R and OR. Otherwise, R and NOR. When it will be seen, when if the control and management of his affairs is wholly or partly in India, then it is called resident. If it is wholly outside India, then these ROR and RNOR should not be seen. Wholly outside India, it should not be seen. Or wholly or partly in India, then only we have to see the resident status of Karta. If he is satisfying additional condition, both of the additional condition, then HUF is also considered as R and OR, otherwise R and NOR. Simple. Next, the residential status of firm, LLP, AOP, BOI, and local authority and AJP. In this case, we have to see only resident or non-resident. That's it. We should not see further ordinary resident or non-ordinary resident. We should not see. Wholly or partly in India, control and management, same resident, otherwise non-resident. Simple. Next, residential status of company. If it is an Indian company, then it is always resident. If it is a, what do you mean by Indian company? We have discussed it in the basic chapter, and hence it is treated as very important from exam perspective. The basic chapter. It is a foundation, right? Indian company is always resident individual, resident person. Other company, if it's place of effective management. What do you mean place of effective management? POEM. It is short POEM. POEM is place where key management and commercial decisions that are necessary for the conduct of business of an entity as a whole are in substance are made. Where there is key management and commercial decisions are taken for the conduct of business of an entity, then that place, country is treated as place of effective management. If the place of effective management is in India, if that key management and commercial decisions are taken in India, then that company, those companies are called resident, otherwise non-resident. If the company's key management decisions and commercial decisions are not taken in India, then that is called NR, that is non-resident. Simple. POEM. Okay. Next is scope of income. This chapter is divided into two parts. One is residential status. Next is scope of income. We have discussed residential status. Now we will see the scope of income. Total income includes Indian income and foreign income. What do you mean by Indian income? Which is treated as Indian company? Indian income. Indian income received or deemed to be received in India. Income received in India or deemed to be received. It might be received in India. Deemed to be it will be received in India. Then that is also called Indian income. Or income accruing in India or deemed to be accrued in India. It is accrued in India but received somewhere else. Accrued means it is generated in India but received somewhere else. Generated means if you have worked for Indian company but you have received that income out of India, out of your bank account outside India, then that's also called Indian because it is generated in India. Okay. Then what do you mean foreign income? Income other than Indian income. Indian foreign income means income other than Indian income. Okay. Then taxability of income in case of individual or HUF. How to compute the individual, whether it is taxable or not, non-taxable, we'll see. If it is a Indian income, if that person is R and OR, remember R and OR, resident and ordinary resident, then that is taxable. R and NOR are also taxable, NR also taxable. Why NR is also taxable? We have seen in the first introductory part. For NR, Indian income is taxable, right? It's called Indian income. Is taxable for every three categories of people: R and OR, R and NOR, and NR. Okay. Then foreign income. If the foreign income from business or profession controlled and set up in India. If, for example, let's assume X is a company situated outside India, is a foreign income, but that is controlled and set up in India. That X Limited is controlled and set up in India. Then for R and OR, that is taxable because it is a global income is taxable, right? For R and OR, global income is taxable. R and NOR taxable. NR is not taxable. For NR, it is not taxable. Okay, because it is not an Indian income, right? Next, other foreign income. Other foreign income. Other foreign income is taxable only in the case of R and OR. In the second case, I will discuss some more point. If a foreign income from any other company which is not situated, which is not controlled in India, then also it is taxable only for R and OR because it is treated as global income. It is foreign income, and hence it will not be taxable in case of R and NOR also and NR also. NR obviously it is not taxable. For NR, R and NOR also it is not taxable if it is not controlled set up in India. If it is set up in India, then ROR and RNOR it is taxable. For NR it is not taxable. For foreign income, only ROR is taxable because for him the global income is taxable, right? For other categories it is not taxable. Simple. This is the scope of income. This should be might be a very basic understanding from your example. If you not understood this concept, then I think you will be in difficult positions because it might be a very difficult for you to grasp the question and to solve the questions if you are not aware of this. Okay, so this might be a key point. Next, taxability of Indian income for other SSEs. Other SSEs means companies, etc. Indian income always taxable for both taxable and taxable for NR and resident and non-resident. For foreign income taxable only for resident because global income is taxable. For non-resident it is not taxable. Okay. Next, some of the notes it should be a key point. It should be a form of your understanding purpose. Income received means received for the first time. After receiving income outside India, then it is remitted into India, then it cannot be treated as receipt of income. For example, I have received to my foreign bank account, actually I opened in some other actually X country. I have received my income there itself, foreign income. But then it is remitted to India, then it is not treated as income received in India. If that income is should firstly received in India, during the first time, for the first time, then it can be our Indian income. Then it is Indian income. If it is received there, then remitted to India, then it is not treated as Indian received income. If it is received for the first time in India, directly to the Indian bank, then it is treated as Indian income. Then it will be taxable for every category of persons. That's a simple meaning. Income may be cash or in kind. Okay, dividend, some other. Not very important. Any income already taxed on the accrual basis. It is already been taxed on accrual basis. Consequently, remitted to India is not chargeable to tax at the time of remittance, irrespective of the resident status. For example, I am a Indian resident and ordinary resident. I have been charged to the income tax for the income accrued outside India because for me, global income is taxable. That income is then actually remitted to India. Then it is not treated as again my income because it is been already charged to my income purpose during the first accrual concept. Okay, and hence income accrual basis, then on the receipt basis it should not be treated as again as income for that person. Income accrued in India means income generated in India or source of income is situated in India. That is source of, for example, I have I have developed on what you call a building. I have constructed one building. From that, I am receiving the rental income. But I am a non-resident. Just think I am a non-resident. But for me, it is an Indian income because it is generating in India, right? Because that building is situated in India, right? And hence it is treated as Indian income. Okay. Next, Indian income deemed to be income deemed to be received in India. What do you mean by income deemed to be received in India? These three categories will be treated as deemed income for me. Contribution in excess of 12% of salary to the recognized provident fund or interest credited in excess of 9% per annum. Annual accretion to the credit of RPF means recognized provident fund. This will be will be seen in detail in salary chapter. Okay, as of now, keep in mind this point. Contribution in excess of 12%. There is a threshold limit of 12% of the salary to the contributed to the RPF, or interest credited in excess of 9%. Then also it is treated as deemed income for me. Contribution by central government or other employer under a pension scheme referred under section 80 CCD. This also we'll see upcoming in a salary chapter. Okay, or actually deduction chapter also we'll see under pension referred under section 80 CCD. Okay. Next, amount transferred from unrecognized provident fund. There is one provident fund. There is four types of provident fund. We'll see it in detail in salary chapter. Unrecognized provident fund to recognized provident fund being the employee's contribution and interest thereon. If we transfer amount from URPF to RPF, then that's also treated as deemed income. Then I have to be charged for that. That's it. Till now we have discussed till we have discussed the first part of the residential status and scope of income chapter. I hope you have understood the journey. If you have any doubt, please put your doubts in the comment section, and also you can ask me in the provided links in the description box. And also I hope all the wish for your examinations, and we'll see in the next part of this chapter soon. Till then, bye bye. This is C. Abhijith Acharya, Abhi CA Classes. Have a wonderful day. Bye bye.